Yeah, hey there. What's going on, everybody? I hope you all enjoyed that wonderful, wonderful conversation we had with Mr. Kevin Burgess. I sure did. And I'm going to enjoy sitting here for about an hour or so, chit chatting with all of you and talking about something I sold, a Dividend King, we'll get to in a moment. But first, did you guys catch any of the Berkshire Hathaway annual meeting? Are you a member of the Berkshire cult like I am? We would love to know in the comments below or in the comments on the screen, wherever you want to put it. So I will say hello to everyone. Welcome back again. I really, truly do enjoy being able to spend a little bit of time with you. So, with that being said, I want to get to something funny in just a second here. As soon as I appease my own nuttiness to make sure that I'm indeed broadcasting to the world, and I can be heard, which I can. Okay, we've got sound, maybe a little bit too much sound. So, everybody, what's up? Craig, my guy Stan. Hey, he's working his way to those 1,000 shares of SCHD. That is hardcore. We're going to put your name into SCHD Hall of Fame, buddy. Don't you worry. Yeah, Gary, David, what's up, all you guys? So check this out. I had tweeted this out. Kind of cool. So Berkshire Hathaway acquired Allegheny Capital. When was that? Last year, I believe. As a member of the cult, I should know the exact dates, but like any good religious fanatic, I don't know everything. So they acquired Allegheny Capital Corp, which they have a subsidiary is Jazzwares. Now, Jazzwares, they make, I think they're a toy company, right? So they acquired Kelly Toy in 2020, which makes Squishmallows. Now, I don't know if you have kids. My kids love Squishmallows, and you might be saying, Russ, what the heck is a Squishmallow? Well, it's not something you eat. It does sound kind of tasty. And a Squishmallow is, hey, what's up, Shamir? My guy from Canada. We always love you, Canadians. This is a Squishmallow, and they had exclusive Squishmallows at the Berkshire annual meeting. Now, look at that. $255. You could buy these specifically and specially. So I knew they would be coming on eBay. You got the Charlie Munger Squishmallow holding the Benjamin Franklin book, and then Warren holding the ice cream. Dude, he does have a child's diet. He's like Buddy the Elf. He subsists on peanut brittle, Coca-Cola, hamburgers, French fries. What else does he? Dilly bars. I mean, Coca-Cola. I think I already said that. So Warren obviously hits all the major food groups there. But yeah, there you go. So people are selling these Squishmallows. Look at that, $255 for the pair of these. And I think 11 bids. And dude, that in a nutshell is in of itself capitalism at its finest. So what's going on, you guys? Oh, I sound weird. Oh, dude. Thank you, Ray. Dude, for a second there, I'm like, that's how you mess with a YouTuber's paranoia. You just say, you sound really weird right now. And I'm like, what? What am I doing wrong? But anyway, so yeah, great point. Great point, buddy. With who's spending $255 on some Berkshire on a Buffett and Munger Squishmallow? I don't know, but that's your fun little tidbit of goofiness for today. And I did sell Kimberly Clark, ticker KMP. You know what? Actually, before we get into that, we already got into it, but just imagine I didn't say that. Pretend for a minute. What I did do was kind of goofed up a little bit on last week's newsletter, which, by the way, you can sign up in the description below, is a combination of doing too many things at once and skimming through some articles and then reading comments. And I took some commenters' comments as gospel, and I should not have done that. So Kenvue did IPO on Thursday, the 4th. May the 4th be with you. Was when Kenvue, which, by the way, if you don't know, Johnson & Johnson had 3 segments. They had consumer health, which is like your Listerine, Neutrogena, things like that, things you find on the shelf at Walgreens. They have their pharmaceuticals, which is like Imbruvica and Stelara, I believe. And then your medical devices, which is what the doctors and people like that will use inside of medical facilities. Well, J&J, I think it's because it's a kind of their slow growing unit. They decided to spin it off. Their biggest thing that they've done like that in their 135-year history. But it started trading as its own public company on Thursday. Now, the confusing part is that it is an IPO spinoff, from what I understand, meaning that usually when a company is spun off, like AT&T did with Warner Brothers, on the spinoff date, we just receive shares of Warner Brothers, and then the parent company drops, their share price drops by the amount of that IPO. Yeah, I did. Well, I know. All right. So I'm reading the comments and not engaging with you. So where were we? Anyway, the short of it is that this is an IPO. And when a company IPOs, the insiders, it means it's a pre-existing company. They're doing an initial public offering. They have a bank. In this case, it was Goldman Sachs and I think a few others that were underwriting the IPO, which means that they will buy presumably at a discount to what they're going to list it on the market as. They will get a portion of that, and then they will bring it to market, from what I understand. And the way that they're doing this is there's a lot of moving parts to it. Johnson & Johnson is retaining 91% of the available shares. I think there's like 6 billion. What was it? 100 some million? No, 700 some million, I think. You see where I have my numbers? Anyway, a small amount was released on this past Thursday, which is what you see trading out in the market. So there's a lockup period, meaning that if all the insiders usually got in at a good price, they don't want them to flood the market with their shares. And that would, anyway, hold on a second. Getting ahead of myself there. So the insiders, I got to take a breath. I get excited about this stuff. The insiders would have sold, right? That it could have crashed the share price, really brought it down, but they don't want that to happen. So they'll have a lockup period for 180 days, meaning that the insiders, which I view us as the J&J shareholders, are kind of like the insiders. So 180 days, I think it's going to be around Halloween, is when we will receive shares as a special dividend, meaning not a dividend in cash, but a dividend of stock. It'll be a stock dividend. And on that day, after the 180-day lockup period is over, the Johnson & Johnson share price should drop by that amount, whatever it is. If it's $26, say J&J will drop by $26. We'll get our shares of Kenvue, and then you can do whatever you want to do with them. And it'll be tax-free until you sell them. So that's kind of why they're doing that, to help us out. Tax-free. J&J, I think, got like $3.8 billion initially from the IPO offering. So in a nutshell, those are the facts as I understand them now. And I will get into that. Oh, dude, yeah. Getting hectic in Spatula City. You know what? That was so weird. So I don't think I was breathing there. All of a sudden, I felt like, whoa, I'm feeling kind of lightheaded. I'm going to have to watch that one back on the replay. That was fun. That's what happens when I'm just like, rapid fire. So, okay. Now, been talking at you for too long. We'll go through quickly. I did sell Kimberly-Clark. Why did I sell Kimberly-Clark? Well, a few reasons that we will just touch upon right now. And then anything you guys want to talk about, let us know. If you're buying Kenvue, do my best to get caught up to these comments fairly quickly. And I'd love to know what you're going to do with that. So away we go to the land of Simply Safe Dividends. And if yours truly can make this bigger, come on, go bigger and bigger right now. What was the deal? There we go. I guess I got to click on it. All right, here we go. So Kimberly-Clark, you probably know them. Scott's Kleenex. They make all kinds of consumer staple products, household products, things of that nature, is Kimberly-Clark. But here's a few reasons why I did sell them. Dividend growth has been slowing 4% the past 5 years, 1.7% increase in January of 23. Obviously, an increase is better than nothing. 88 years of dividend growth. That dividend growth streak is 50 years, so they are a dividend king. Hence the title. I did sell another dividend king. You can see their growth going back to 2021. It's been, 2022, it's been 2 pennies a year. So they might just keep that up indefinitely because I think they have a bit of debt. I know these are backward looking numbers. When you look at the 5-year average of the dividend yield and the PE, this tells us where we've been. This won't tell us anything about the future. So if you only buy on this, it's not a guarantee. It's not a good thing to do. It could be, it could work out, but their dividend yield is below the 5-year average. That PE has just really increased, and they are at the high end of the 52-week price range. Couple things that I'm not that keen on is their free cash flow payout ratio is almost 80%. Well, it's expected to be. This is the next 12 months. We're at 68% now, but dude, we were at 93%. Then it dropped in 2020 when we had the pandemic. Then it went to 89, 84. So it's come down, but it's still a little bit higher than I would like to see. The other thing is their sales growth is only 2 to 4% since 2020, and worse than that going all the way back to 2013. So that's another point. Their shares outstanding, they have been decreasing them, but that has slowed down as of the last few years. Their total sales are pretty much flat going back to 2013, 19.6 billion to 20.3 billion. So just not exciting. They do have very nice return on invested capital, so we do like to see that. And you'll notice the return on equity is kind of high, and I'll get to that in just a second. So not a bad business, but dude, that net debt to capital has been over 90% since 2014. That is pretty high, and it's just not getting paid down. So I would love to see that paid down. And then as we look at an intrinsic value, we see that it's about $114. So I would love to buy Kimberly-Clark under $120. So it's pretty much fully valued. I had been underwater on them for quite some time, and it's really shot up in share price. So I pretty much got out on the share price that I had a cost basis about even. I think I made a few pennies, but I just wanted to put that money into something else. So in the taxable account, I sold 25 shares at $144.50. And of course, that was the morning of the earnings. Their share price went up to, I think, $147, kicking myself a little bit, but now it's settled down a little bit. So I think as things start to improve, a lot of the consumer staples that have just been on fire, I know we can talk about PepsiCo later, and a bit of a pickle I'm in with a covered call that I've had to roll out a few times. I think they are all way overvalued, but a lot of people are finding safety in these. So that is, in a nutshell, Kimberly-Clark. No, thank you. Close that. And then the base case, the bear case worse, they give an intrinsic value of about $86.30. So again, I would really love to pick up Kimberly-Clark and add more, about $120-ish, maybe a little bit lower. So that's what I sold. And instead I've been buying ARCC, Ares Capital. I think they've reduced their leverage, which is giving them more money. I think banks are tightening up their lending standards. So business development companies like Ares Capital, I think, can take advantage of the whole banks that are really scaling back the money that they're going to be lending out. And I think this could be a great thing for some business development companies and Realty Income. Let us know if you listen to Realty Income's earnings call, if you're a lunatic like I am. But what I love that what they said, sale leaseback, they mentioned 7 times, and they acquired a grocery store chain that's international. And again, Realty Income says they have a lower cost of capital than their competitors. So they think that they will be able to really take advantage of some businesses that need money. So what they do is there's a thing called an OpCo PropCo, and Vici Properties, which I listen to them too. Dude, Vici Properties has been tied to Six Flags, other experiential resorts. They're starting to branch out beyond casinos, which is really exciting. And Vici Properties has said something similar, that they're looking for opportunities. They're looking to expand. So really cool, something to watch. Oh, the Opco Propco, what I was telling you. Breathe. You can get it all out. We're going to get to chat. So the last point I'll make is, if you've never heard of an Opco Propco, meaning that theoretically Six Flags, if they needed money, what they can do is they can sell all of their property to a company like Vici. Vici will become the landlord. They will give them cash for their real estate. And then they immediately do a sale leaseback. So they're selling the property to Vici in theory, and then they're taking out a 15 or 20-year lease on all that real estate, whatever the contract works out for rent escalators, however they're going to do that. But it's kind of a win-win in a way, that Six Flags would get an infusion of cash and Vici Properties gets the real estate, and then Six Flags would become the tenant to the property that Vici now owns. So they did that. Realty Income did that with the Wynn Boston Harbor, right? Boston Harbor Resorts. A casino. I don't know if it's a resort. It's a casino, but okay. Now, I'm going to get caught up in this quick here. Let me take a sippy sip of the agua. Shout out to Harris for that. All right. I'm going to go rapid fire through these. I swear to God, I'm going to do it. Oh, one other thing. Do you see what I did here? You see how I'm shifted? Well, this guy, Ben Franklin, watch. If I turn my head and I don't show my eyes, of course, now it's not going to do it. But in my interview with Kevin, it focuses on this lunatic right here. Ooh, it focuses on him and not me. So I'm blurry and I didn't catch it. I watched back. I'm like, I've had it with this guy. I think I might put this on eBay, see if anybody wants it. And yeah, but for this, I was like, I've had it, Ben. I'm blocking your head. I can't take it anymore. My wife says he's an attention whore. He wants the camera more than I do. So, all right. Yes. Cool, Shamir. You watched the whole thing. I will say happy Sunday to all guys. Crad, Ray, okay, you're here catching me live. Good, good, good. I'm going to get caught up to you guys. I did do a Warren and Charlie video, one of my favorite ones, some advice they gave. They had the Bloomberg ties. Nice. Amber, dude, you're at 202 shares of SEHD. Very, very cool. And I think they're struggling a little bit because of, right, they still have some banking exposure, even though they pared some of it back. Benny, I agree with you on Procter & Gamble. I sold them. I think they are fully valued. And I know it's going to happen. All these consumer staples are just on fire. They're like that locomotive I think it's slowing down. And like the John C. Stennis I was on, dude, it takes a long time to turn it around. So it doesn't just happen overnight, but it still chugs and chugs forward. All right. So let's see. I told you guys why I sold. Oh, Kevin, you bought some Kenvue. I'm a little mixed on Kenvue. I still think that they're a consumer staple. So I think their valuation is a little bit rich right now. And I want to see what happens over the next few months. And my worry is that in the fall, in October, that shares are just going to drop, because when everyone that holds J&J gets that special dividend, the stock dividend, that they're going to say, yeah, I don't want this. I'd rather have the pharmaceutical and med tech exposure, sell. I think a lot of people could sell, and it could create a buying opportunity. So there you go. I talked about, is Kenvue a buy? Again, if you guys want to talk about anything, we'll take the show where you want to take it. Let us know. Shamir is looking forward to Tyson Foods earnings. Interesting one. I know a lot of you people like to do that. And look at this, dude. I think I caught up. Awesome. TSN should go up. Yeah, I haven't really dug into them too much. He'd love to see what they have to say about US Bank. I mean, I can do a intrinsic valuation for you if you want. Let's do that for you, Mr. Steven C. C. The C is for, I don't know what the C is for. All right, here we go. Let's do the intrinsic valuation first. I'd be curious just to see what they give. US Bank. Come on, you can do it, computer. We zoomed in too far. It's too much. Yeah, I went way too much. Oh, there it is. Hey. They give US Bank an intrinsic value of $59, and it's currently $30. Worst case, $45 with a discounted cash flow value that's 56%. It's 56% below their cash flow. So, you know what that is, the discounted cash flow. That is really, really interesting. Again, I don't know. I would have to look at US Bank. I think, and I've said a lot of this was overblown. I think a lot of the financial sector was overblown, but having never tore into them, I don't think they show us we'd have to look at their 10K. Not going to bump around that, but yeah, this is alpha spread, by the way. I want to see one thing if anybody has been buying. Yeah, look at this. Here you go. If anybody wants to pause the video, you can. Let me get rid of myself here. I didn't mean to show you guys that, but where am I going? Here, sorry about that, everybody. This is what I wanted to show you. So you can zoom in on the undervalued companies. These are all the sectors and just everything. Everything is undervalued, and there are 225 results on that. But what I wanted to see is here we go. So that is really interesting. So over the past, let's see the trends. Let's see the sales. So we had some sales going on. Nope, people are like, come on, dude, what are you doing? I just wanted the sales. Oh, forget it. Anyway, the CEO, Andres, I don't know how to say that, Sacheri, he sold quite a bit, $25 million worth. Terrence Dolan, the vice chair and chief financial officer, sold in November and December. So that is interesting when you have especially the CFO and the CEO selling, and the only buys were from a couple directors in April and May. But that's interesting. What do you guys think about that when you see just before 2 months before all if everything blew up, that you have the CFO and CEO selling shares? Now, again, I don't know if those were restricted shares or whatnot, but let me know. And then here we go. We'll just see what they give US Bank currently a 6.25% yield. So there you go. That might be worth the risk. But again, I would need to know. Yeah, every bank cut during the crash. They just went ex-dividend March 30th. Yeah, there you go. You can see the dividend yield is way above the 5-year, and the forward PE is way below the 5-year. And they're way at the bottom end of the 52-week price range. So earnings payout ratio, 41%. Better to look at earnings payout ratio for banks. So I'll just go through this quick. Sales growth, slow. They predict, or they actually did dilute shares just a little, just a smidge, but sales are still up. So really interesting. Net debt, only 37%. So, yep, there's USB. And again, you guys would need to, I'm all like, you guys would need to dig into that just a little bit more. I've never dug into them. So let's see, where were you, Steven? Ooh, Joe Oliveira. He recently called. Oh, by the way, shout out to my friend Derek, Engineer My Freedom. I will be in Ireland in like 21 days or so. Don't think I'll be getting to a live stream then. I know, I'm so sorry, but my family and I are doing a whirlwind tour of Southern Ireland, 10 days, 9 nights, going from Dublin all the way down to the south, and then across the whole island over to Killarney and up to Galway, and then back over to Dublin. So I'll have some content scheduled to come out. And, actually, you know what I might do? If I can get Wi-Fi and an internet stream, I might just say hello to you guys. No content, just here. Maybe I'll do, have you ever seen those channels in Vegas where they are walking around and they're holding the phone and they're just walking into casinos? Oh, maybe I'll do something like that. We'll see. I don't know if my phone's going to work there. So, yes. Okay. So you closed. Oh, by the way, I meant to say that because if you listen to Dividend Talk, I'm going to have a pint or a coffee, depending on time, with Derek, Engineer My Freedom. Recently sold his smaller PEP position in Clorox. Yeah, I sold Clorox too. That'll be coming out in the newsletter. I just sold them also on Thursday, I think. Whatever day their earnings came out, they popped up and I sold them. Yep. I agree, man. Just all the consumer staples are just so overvalued right now, but I don't know how much higher they'll go. We don't know. And well, we'll get into PepsiCo in a minute if you'd like to. Rick, am I looking at any regional banks? I am not. I've been buying TD. I'm not that confident in the regional banks. And I guess we would just really have to dig into each one case by case. I think the bigger banks are just going to be fine. As we saw, like JP Morgan, they just got stronger. They picked up First Republic for pennies. Toronto Dominion, TD, they got out of First Horizon. There was some talk that may have been blocked anyway because the U.S. doesn't want a Canadian bank to be metastasizing and spreading its tentacles too much here. But I think that would have made them like the 6th largest bank in the U.S. if they did acquire First Horizon. But so I have not looking at any regional banks. But you guys, I'd love to know. Share with all of us what you've been looking at. Please do. Anyone had See's candy before? I've never had the peanut brittle. My wife, her family likes See's. So for Mother's Day or birthdays for some of the older people in our family, will get See's as a gift. Okay, Huntington Bank. Nice, Carolyn. Thanks for joining us, Carolyn. I don't think I've seen or spoken to you before. So thank you for popping on by the Dapper Dividends channel. And for the rest of the show, we're going to do the voice like that. We're not going to do the voice like that. TFC. I don't know TFC. Hold on. I need my dad mug. See? It's a dad mug. Okay, Ray. I don't know TFC, but just so I don't sound like a complete... That is, Truist Financial. Yeah, they also have a 55 dividend safety score and a yield of 7.25%. So all these regional banks, that's some risk for sure. But what a time to lock in a great yield. And if they end up being safe and coming out unscathed, man, you're locking in that 7.25% yield. So let's see. What am I doing here? Stephen B. Why did USB not me? Oh, dude, I get my Stevens confused there. So that's just me. That's just me. Hey, KC, I never got back to your last email. It's been on my to-do list. That's always evolving. I don't know if you guys feel like that, but sometimes I swear it's like my to-do list of everything in life. On YouTube, life, just I cross off one thing and 2 more things appear. I'm like, but it's good. Boredom is a word that's not in my lexicon, and I wouldn't have it any other way. So regional banks via puts and calls. Yep, that might be a way to do it, but I don't know when this is going to turn. I think we started seeing some of that on Friday. Yeah, exactly. We were talking about USB, and in November and December, if you're just joining us, we saw that US Bank Corp, their CFO and CEO both dumped a lot of shares. And again, the caveat I will say is I haven't been able to verify. I don't know if those were restricted or any kind of stock options, which a lot of times, nothing wrong with it. They don't want to be overweighted. They'll get stock options awarded, and then they will sell them so they can get cash. Oh, dude, Lisbon, Portugal. Have you ever watched Casa de Papel on Netflix? I like that. One of the main characters, they all take names of cities. Her name was Lisbon. So that was pretty. Oh, for a second, I thought we were going to see something about IEC, Icon. Have you guys seen that whole hubbub with Icon Enterprises and Hindenburg Research? It looks like Icon, from what I understand, I could be wrong, that there are pretty much no retail investors. I'm sorry, there's no institutional investors, like no mutual funds, pensions, things like that. It's pretty much, I think 75 or 80% is held by Icon and his son, I think. And then everybody else is a retail investor. And they're saying that they're like diluting shareholders and bringing new shareholders in and paying the old shareholders with that money coming. It's a Ponzi scheme, and their shares dropped 25%. Maybe I will. I might do a walking tour just for a little bit. We'll see. Oh my God. 435% in regional. Casey, that's beautiful. Yeah, that's kind of funny. Well, but you know what? If that's money you know what you're doing with, and you understand the risk, and that's all your individual risk appetite, right? Yeah, maybe I'll do that. Even if I don't, even if I can't do it live, Ray, maybe I'll record something and put out like a 10-minute video. I'll go in a few stores and find some Dividend products, some products that are made by companies we know but are foreign. So, we'll see. What Canadian banks do you own, Shamir? Like I said, I've pretty much just been, I think TD. You know what? Let's look. I think TD is my only Canadian bank. Let's see here. I'll bring you guys through to the portfolio. Let's see. All right. There's Truist Financial. So we go, dividend news. You want to do some dividend news? Well, it's like my kids. Hey, we're going to do this. And they're like, we don't want to do that. I'm like, well, that's too bad because we're doing this anyway. I'm the parent. It's my show. All right, where are we at? Let's see. So we had, I don't know, you guys want to, let me do this. Let me pop me on there. Hello. Say hello. Okay, so FLIC, which I don't know. First, is that Long Island? Yeah, First of Long Island. There you go. Just read it, bud. They got a dividend downgrade. A lot of downgrades. I don't know Aberdeen Global, but they got a dividend downgrade. Ticker AWP. Main Street, shout out to Main Street. They raised that dividend 2.2%. Love Main Street. I wish they would come down to 38-ish. Again, Simon Property Group raised that dividend 2.8%. I'm going to go fast with these. You can always go back, pause it if you want to read the little blurb there. Newell Brands. Who does Newell? They don't own, not Rubbermaid. Yeah, I think Rubbermaid, right? I think Newell owns Rubbermaid. Anyway, they got a dividend downgrade. They need to use some of that Rubbermaid and clean that up. UGI, ticker UGI. They own AmeriGas, which we just bought some more AmeriGas propane. They increased the dividend 4.2%. Paramount, there it is. Buffett remarked on it, said it's never good when a company cuts their dividend. 79% dividend cut. Charlie Munger says it's a hell of a business to be in the movie business and streaming and all that, which makes me wonder, why are they still in it? But anyway, Paramount cut that dividend pretty significantly. Leggett and Platt, I hold them. We're down a little bit. They raised that dividend 4.5%. We're getting there. TELUS, right? They're Canadian. Canada's largest telecom provider. Raised that dividend 3.6%. I know, we got a lot. This is the biggie. Apple, by the way, they're going to be the first company that will return over $1 trillion to the shareholders. They raised that dividend 4.3%. What an anemic small yield, but hey, you're buying that for total return, I would think. Pembina, now they are doing quarterly dividends instead of monthly, 2.3% dividend raise. And last but not least, we got a downgrade from Conan Steers REIT, the Conan Steers REIT. And then the last thing we were going to look at, right, was we'll just do the consolidated portfolio view. I don't want this to become a portfolio update, but let's see. Look at my yield right now, 4.83%. And we're getting there, down to 40 holdings total. Again, this is not everything we own. We have a sizable chunk of our nest egg in our 401k through the employer, which we don't share that. But let's see here, minimize that. I should get me out of there. Hold on. I'm going to go away, everybody. All right. So here's my portfolio. Again, I'll go to the bottom. We'll scroll through it. If you want to pause the video, pause it, look at all this stuff. But I think the only bank, so I have Ares Capital Financial. You know what? Let's sort it by, how about percentage of income? Look at that now. Look how big. For me, I think buying Ares Capital under their net asset value, which is $18.40, I think that is fantastic. And I've been buying a lot, up to almost 400 shares of Ares Capital, 11.8% of the income. Of course, the black eye AT&T, PepsiCo, we're at 7.9%. Going to hold those hopefully forever. A little bit of a pickle right now. We can talk about it. Main Street Capital, there you go. So Toronto Dominion is clocking in there at 5.5%, up to 125 shares of TD. And you can say I have IIPR. What else? There we go. 100 shares of SCHD. Nexstar Media. Shout out to KC, putting them on the radar. Did the deal. If you live in Chicago and you listen to WGN, you'll constantly hear them. You know, WGN Radio, a Nexstar Media Group station, 3.6%. AbbVie, what else do we got? Leggett and Platt, up to 100 shares of EPD, like them. J&J, I think I might be adding them instead of Kenvue so that we can talk about that. Yeah, Prudential Financial, they're not a bank. So I believe, and see, this is something I should know off the top of my head that, sorry if that mouse is in the way. My wife's like, why is the mouse so big? The cursor. What else? Here we go. I'll just scroll to the end. You know, this could be of some help to you guys, seeing all the ratings and whatnot. Yeah, Vici, MetLife. I'm thinking about moving out of them this week and just consolidating that or whatnot. And yeah. Okay. So I guess I was right. TD is my only bank. I'd like to know what you think of the banks. What's your favorite? Shamir, I was asking you about it. Let's see. All right. What is the matter with this guy? I love it. I really enjoy talking to you guys. What do you want to talk about? Let us know. Let's see. So what were you guys talking about? There has to be opportunity to get in the regional bank near the bottom. So KC, what would your opinion be? What would you look at? Just the depositors to see if that's growing. Obviously, bank runs are crazy because you don't need people standing in line like back in the day. They just happen like that in a matter of minutes. Let's see. Yeah, only the balance sheet. Okay. Thoughts on TSE? Let's see. Yeah, they do. They love their sugar. I think it keeps them going. You know, it's hey, it's what keeps them talking. It's their, oh, yeah, Carolyn, you watch us and Ryan. Hey, thank you so much. Do appreciate that. I know somebody once lumped us into the Dividend Bros, but I'll take it, I guess. I'm not going to get it tattooed on my neck yet. Maybe someday. All right, let's see. KC, I like it, talking about Tyson Foods. They were a popular one. I remember not too long ago, a lot of people were talking about TSN. Yeah, that could be good to get in early. Oh, if you saw this comment, that is the CFO, which is the grandson, I think, right, of the Tyson heritage, he's going to be the future CFO, I think he's the CFO in training. I don't know if they've taken his training wheels off yet and made it official. That might be. Hey, his resume is he has the Tyson name, I believe, right? All right, let's see. Oh, Shamir, he's like Pokemon with the Canadian banks. He has all 6 of them. By the way, somebody shout out what movie is Spatula City from? Open Till Midnight, one of my favorite movies. Well, I won't give it. That'll date it. So somebody knows. Who's the first one? You'll win a special prize. No, you won't win a spot. I don't know. I'll give you the thumbs up. All right. Oh, good. Don't underestimate the ability of bad management to invent new ways to ruin a good business. We've seen that happen. I think AT&T comes to mind, right? I'm in a cult. I do. I think I've said it with, Berkshire and AT&T. I just have this grand delusion that the day is coming when they're going to be $22, $23 a share, and I'll be able to get out. But I don't know. Does anybody else have this problem, or is it just me? Oh, Casey, I should have had that ready. She started a AT&T versus Hero Health because I had been saying, I think I told you, right, that maybe I should just sell all of my AT&T and put it into Hero Health, see what happens. It's so hard because they don't pay a dividend, and that's something I'm working through at my own speed, my own rate. I did have BMO, and I sold them. I only had 10 shares. It was ancillary. Again, I'd been holding them. I just wanted to consolidate, just keep it more simple. Royal Bank of Canada, Kevin bought. Very nice, right? RY, Royal Bank of Canada. Yeah, good point, John, with Tyson. They're not going anywhere. They're big, but I mean, I think they're going to come back. I think of it. That should be one to look at. It's so funny because it's like, for me, it's so easy to create a reason to buy a company, but then selling is so hard. That's why I think I'm a great dividend investor. And I don't know, do you feel that way? That it's really easy to buy, but you marry the trades and it's not even a trade. It's an investment. So I don't know. Let's see. Wow. Well, look at that. What is that one? That's I think that's an Aldi candle. I don't think that's over my shoulder there. I think it's not a Yankee candle. It's too expensive. Yankee. What movie was that? I should get a shirt. What movie was that? Right? With Captain Tom Hanks, remember when the pirates took over the Sudanese or whatever they are, the pirates? Yankee, look at me, Yankee. I'm in charge now. That was the worst accent ever. I know you guys are like, please stop doing accents. It's terrible. Look at me now, Yankee. Yeah, I didn't know they had Elmer Glue and Yankee Candle. What are they doing, Newell? Come on, Newell. You got some brands that are well known. What's the problem? Let's see. Intrinsic value for Tyson. It's interesting. Yeah. So Casey talking about Hero Health. Again, Mark Baum, the CEO, I really enjoyed him. And I think when we talked about that and I listened to that first earnings call, it was I think they were right around $20 a share. And they're like 27 now. They popped. But let's see. Major consolidation banking industry. Yeah, well, I mean, obviously, there's a lot more U.S. banks than Canadian banks, and I think this is just what's going to happen, and that's the way they're consolidating. Is the big banks are going to keep getting bigger, and they can withstand the held-to-maturity losses. But at the end of the day, I think it all comes down to the depositor confidence. Most banks, people deposit, they take those deposits, they make other loans, they do things with those depositors. But when people want their money back, which is what happened, as soon as that confidence starts eroding, then you run into that blow-up problem, which is what Silicon had. And they had to sell and realize those held to maturity, right? They had to realize those as a loss, and they didn't have the cash like they should have, but that's their problem. That should be something you learn. They learn. I don't know. We all learn. We should always keep learning. But I don't think people feel that and that's been one of my theories, at a TD, at a, JP Morgan Chase, hopefully at a US Bank Corp. I think people, Bank of America, depositors feel safe there, right? Yeah, there you go. Exactly what we just talked about. So here's my question, what I asked. She said, there's no individual metric. You want to understand if the bank provides value or not. Yeah, okay, good point. Does it add anything or just move cash? Yeah, banks are a whole nother world of assessing, I think. That's definitely something. Here we go. Any interesting European stocks could be worth having a look at? Yeah, dude, I don't know if you have yet. I would recommend listening to Dividend Talk, to their podcast. And I just listened to the one yesterday. They talked a little bit about Kenvue and J&J, but they also mentioned some European names that they like. I think Legal in General is one. Yeah, I don't remember that. Yes, you win. You win, David. It was from UHF. Weird Al Yankovic, one of my favorites. All right, let's see. Shamir's been nibbling away at TSN. Yeah, good one. Interesting. Oh, Joe, yeah. The Dividend Rat Pack. You know, we're thinking about, so fun little thing here as I take one more sip. As I just dumped tea on my shirt. Fantastic. Good thing it's a black shirt. They have a punk rock museum. I'm a big fan of punk rock. So at the latest, my birthday in April, we're going to go to Vegas to the Punk Rock Museum. So I'll definitely do something with Mr. Ryan. I'll get to meet him live and in person. It's the Dividend Rat Pack. She doesn't see any major consolidation. Well, we'll see. I mean, yeah, what did Buffett always say? There's more bankers than there are banks. So let's see. Yeah, Jamie Dimon, that dude is just, you knew he was going to do something. He was quiet for a while, and then all of a sudden, just, all right. Never watched, only know the meme. Cool. I'm assuming Spatula City. Let's see. What do you guys? Oh, I think I got caught up. I love it. Joe thinks BAC, he's wondering if it's being conservative and FRC was a mess. Yeah, that's just, you're talking about BAC not acquiring First Republic. These big banks, man, it's just what happens, right? Who did JP Morgan acquire in 2008 that made them even bigger? It wasn't AIG. No, AIG. Somebody help me out. I'm drawing a blank. Who was it? They keep doing this every time there's a crisis. No, it was somebody watching. Look at this. David. Yeah, Washington Mutual. There you go. Thank you, John. That's who they acquired. Dude, I got tea everywhere. I'll just use a piece of paper. This guy's in Bear Stearns. Yeah. You guys are right. WAMU. It's not like a Wawa. Shout out if you've ever been to, worked at, or slept in a Wawa parking lot. Just went to the Punk Rock Museum. Yeah, we'll see. I don't know. I love it. I've been a fan of punk rock since 1990. I've been a fan of punk rock since 1992. So is that interesting, Casey? They say biggest bank default in U.S. history, and I know that they said that Silicon First Republic, right? They say was the second biggest, but I think it's interesting because there's so much more money in the system that I would want to see like an inflation adjusted default. I don't even know if anyone's done that, but I think it just makes it look so much worse from Washington Mutual, right? Oh, let's see. Has Charlie done that? I don't know. He's too big of a hurry. All right, we're coming into the home stretch. Let us know. What do you want to talk about? What do you want to see? You want to see, I don't know. Give me something. Hey, look at it, everybody. Isn't that funny? I said, we're coming into the home stretch, and all of a sudden people are like, okay, that's it. I'm out. But you don't even know. You didn't even know I was going to. I was going to do a chair spin. See, look at those people missed out. Watch them get dizzy and have to vomit. Anyway, what else was I going to talk about? I've been buying Aries Capital. How about this? Going into this week, oh, my PepsiCo. Yeah, so the PepsiCo, I've been talking with KC about it. Yours truly looked at the chart, and before earnings, when Pepsi was at like 182, this was like a week before earnings, I said, you know what? 185 and change is the all-time high. I'll bet even if PepsiCo crushes earnings, they're going to stall out around $190 a share. So yours truly for $49 premium sold while PepsiCo was at like 182, sold a covered call for $190, meaning that I received the 49 bucks, but I can never get paid more than 190 a share. And as you know, if you've been following me on Twitter, I say no trees grow to the sky, apparently for PepsiCo. I don't know, like 9 out of 10 trading days, they set an all-time high. And just like all the consumer staples, just been blowing up. So here we are, 190, pushing 195. And I had this Friday. So I rolled it out once to May 12th. After it was all said and done, I was still up 91 bucks from that. But May 12th, $190. We have this Friday. I got nervous on May 5th, 2 days ago. And I said, I think I'm making a mistake. I didn't have enough cash to buy it back outright in the account. So what I did, what yours truly did, is I rolled it out to get more premium. I rolled out to 77 days ahead. It's July. Actually, here, I'll show you. Come along with me, everybody, to the land of the dividend tracker. I rolled out to, no, that's not what I want. Hold on. Hold everything, everybody. Just, let's do it again. I wanted this one. Here's where we go. Okay. So this is the dividend tracker. Link below. You can always follow what the account is doing. And here it is. The PepsiCo covered call. It is for, let's see what happens if I click on this. No, they don't recognize the ticker. Brilliant. This is brilliant. I'm trying to get the date. 7/21/23. That's it. So 23 is the year 23, July 21st. It's a $200 covered call that I sold for $285, and I bought the other one back for I think $496. So I have until July 21st. PepsiCo needs to be under $200. I'm thinking it's gonna pull back eventually, right? And I guess I'll just forever keep rolling it up and out. But I'm looking at the chart; it's way oversold, or I'm sorry, overbought. I don't know who keep buying at these prices, but somebody is. There's people that know something I don't, and I was net 191 exactly. So it's been about 100. After it's all been said and done, right now, if nothing changes and I do not get those shares called away, it will be $100 mistake on my end. But I don't want to realize that $150 gain. So, oh, look at this. Look at this. All right, let me get caught up to you guys here. Dude, Shamir sold out of PepsiCo entirely. Ah, Benny's having a PepsiCo. Nice. Nice, Benny. Let's see. Yeah. Here. If the Fed pauses. But wouldn't that be bearish if isn't that why people and investors are buying PepsiCo? Because they are well, you know what I'm going to probably do? I'm really hoping we get like a $4 or $5 pullback on Pepsi, and I'll probably just bite the bullet if I can buy that back for, $100 or something. I'll eventually make that money back. And it's just, I don't know. I really didn't expect this looking at the chart, the technical analysis. But yeah, so you think it would keep going up? Because my brain says, well, people wouldn't need to be as defensive, right? So that's why if the market does so well, and I think that's why we didn't see PepsiCo flying up on Friday. I don't know, but we could have also seen a lot of shorts covering because they didn't want to go into the weekend short in case anything happened. So let's see, flight. I see what you mean. Yeah, pauses. Well, because I keep thinking a pause, people are going to interpret as bullish for the market because they know that, yeah, recession's here, but what we're closer to the recession being over and the certainty of it being over. But I guess the only uncertainty is we don't know how deep or how long it will be, right? Why are you doing this? Come on, just tell me it's going to be okay. In a week from now, Pepsi will be at $180 a share. But here it is. So worst case scenario, worst case is I'm getting $200 a share. I'm going to get, $20,000 on my 100 shares of PepsiCo. With my cost basis is 150. So yeah, that would be a $5,000 gain I'm paying taxes on. But, I guess we'll have to see. We'll have to see. And yeah, I don't know. Everybody light a candle, go to your nearest church, synagogue, whatever you go to. I got a candle lit here. We'll keep our toes, eyes, and fingers crossed. But I know you're a broken record telling me to never sell. I was certain though. I was so certain. And this might be the blow up I needed to finally say, you know what, I'm just not going to do it. Just not going to do it. Please give me sympathy. Please give me pity. Yeah. All right. So let us know. What are you guys buying? Just rapid fire it out there for everyone watching. What are you hoping happens this week? What is the top thing you're looking to buy? Just put that. What is at the tippy top of your buy list this week? Oh, no drama investing. Well, technically I made an executive decision to just roll it out, and I don't know. I know I play it up that way, but I don't know. I can show some emotion. I wouldn't say I'm overly emotional. It's just the market didn't go in the direction I wanted. So what am I going to do? Like, what are the options? I'm not freaking out, but like I said, worst case, I'm going to make, that'd probably be like 700 or so in taxes, I don't know. I'm going to make money. Let's see. Hey, what's up, Trevon? He's looking at ESS. Oh, celeb vids. Yeah. Well, you know what? And then this is the thing where you have to realize, because then my brain says, Shamir, that I can sell cash secured puts. So if it gets called away at 200, I'll do a weekly cash secured put. But I don't know. I don't think we'll see like what happened with Starbucks. But I don't know, guys. Stay tuned because I'll be talking about it. I'll keep you updated. We'll see what happens. But on the daily chart, the weekly chart, everything I look at, PepsiCo is so overbought. But we'll see. The market can be irrational pretty much. So KC is piling into Harrow Health, HROW. Kevin, Cat, if it goes down, nice. Key Corp, Kevin's buying Key Corp, looking to open a position in that. Steve is buying AIT. I don't know AIT. Altria, BTI. Western Union, interesting, SCHD, and cash money market funds at 5%. Okay. Yeah, Ray. So here's the thing, Ray. I can beat you to it. Casey's going to say where HRO is going, it's going to be, this is cheap. This is really cheap. So she's going to say early is now. Now is early. And this is something I'm learning too, is to not look at where it was a year ago when it was $5, but to look at where it could be in the future. And this is something that we really need to do, try and learn to invest through the windshield, right? Yeah, very rare pep is at value. Frank, we'll see. I may eat crow on this one, but I don't know. We'll see what happens. I guess I'll just someday hears me a year from now. Well, I rolled out again to $280 a share or something crazy, right? All right. Benny looking to add J&J, Lowe's, Texas Instruments, and Vici. I did buy some more Vici. Again, I'll be. We got a farmer's market we're going to as soon as I wrap up with this, and we will. I'm going to be doing a newsletter tonight. So if you want to get everything I bought and sold in the week and just a couple quick thoughts, I am going to let me know something. Before you guys go, put in the comments if you read the newsletter and if you read Ryan's newsletter. And I'll tell him this too. I some of these newsletters, like when people show what they buy, I kind of just skim like the thought at the beginning, like, how to stay motivated as a dividend investor. I'm just kind of like, I just want to see what you bought. I don't know if you guys do that, because if that's the case, I'm not really going to spend much time trying to come up with like some wise thought or parable or something to put at the beginning, All right, let me get through to you guys here. SCHD and some SLG property. Nice. Okay. AIT or IAT. Nice. Let's see. And here we go. She bought a Hero at 550, but bought the entire way up. And she thinks it's cheaper now at 550. That's because of earnings. That's because of what they're doing that she's projecting out. So yeah, that's something that we're going to learn, and you need to learn as an investor. You can't look at it. You can, but where a company was at 1 year ago is not necessarily where they are at today and where they will be at in a year from now. So always try to focus. And this is what I'm really learning to do. Focus on the future. Look at what is going to happen, what you think. And it's harder to do that, but yes. And then Amgen, OJ. What's up, OJ? Toronto Dominion, PTI, British American Tobacco, and PSA. And we're going to cap it there, everybody. We're wrapping that up there. I really do appreciate you coming on by, stopping on by the house. Like I said, I got a farmer's market to go to with the fam. So, dude, thank you guys for the chat, for sharing your ideas. Light a candle, say a prayer for my PepsiCo that it drops down below $190 by this or next week's end, and I can buy their contract back under $100. But either way, this is new information, this is knowledge, this is learning, and I'm happy to share the mistakes with you, my learnings with you as we go forward, and hopefully we can make each other better investors. So again, thank you guys for doing this again, and I will be back and I will be talking to you next week. Enjoy Pee-wee taking us out.